I am Ryan with East Main Street Insurance. As always, I have the handsome Chris Kamara with Cobalt Insurance. And yay, I didn't go to Hawaii again.
I
Although
don't know. It was up in the air.
it feels like I'm in Hawaii. It's like 80 degrees. I mean, it's
Yeah,
not as humid.
I
But
played Rockland today, and it
Yeah.
was hot even in the morning. So
it is hot out there. We are House Calls, Home Insurance Podcast. We are live streaming Facebook on my page, East Main Street Insurance, Cobalt Insurance, and both on YouTube as well. So it's always great, I think, to put these out here so that way clients can watch them at their leisure. But if you are watching now, which you aren't, but if you're watching this at your leisure and you have a question, put it in the chat. We'll see it. We'll get to it and address it and answer your questions. It's hard to get a hold of an agent these days. And that's why we devoted our time between 2 and 2:30 or 3 o'clock, depending on how in depth we get, to bring you the newest, the latest, the greatest information.
I just confirmed we're live on all our socials. So
we're live. And yeah, if we see people hop in, we try and address it and see if we can answer their questions, because that's why we are here. Chris is always the lead investigator on these house calls meetings or these house calls podcasts. So, Chris, what's new and exciting?
Some pretty good stuff. Not all bad news, thank goodness. Just give me 1 second. Let me get to the right page here. All right, and we got 4 topics today. So the first is a very clear graphic. It's a little formatted, funny, but the message is very clear about auto insurance. I know this is house calls, but we do cover all types of insurance. And then a few surprises we're seeing in my agency, and it's definitely good news for the consumer. And I'm hearing it from other agents. Fair plan servicing bottlenecks. I've experienced quite a few myself. And then Ryan is going to tell us about what looks to be more solid increase for the California Fair Plan rate hikes.
Yeah.
So I couldn't fix this one piece on 2021, but I'll read it exactly as it is. Why does it feel like auto premiums skyrocketed overnight? Because the Department of Insurance froze rates. Yeah, even better. Froze rates during the pandemic, and they created a massive dam that's finally started to break. So
yeah.
No rate increases, even some refunds to drivers during the pandemic, and then rates slowly going higher. 2023 increases of 15%. 2024 major increases, 20% plus for carriers, and then 2025 15%. And this is a visualization for the average California Department of Insurance approved rate filing trends across major carriers. Everybody's individual circumstance will vary drastically based on your driving record, your vehicle type, age of driver. If you've got a youthful driver, I tell clients all the time, expect $2,000 more in auto insurance the first year. I just set the expectation there. If it's better, great. If it's $2,000, that's pretty much typically what we see. Then at least their expectation has been set. So your individual increases will vary, but I will say I've had numerous calls with clients who've had their auto insurance double.
Yeah, and I think that the leveling out is, I would say, going to be pretty stagnant, especially as more carriers start to get onboarded and are filing rates. A few years, probably until next year, whenever competition starts to kick in and maybe some things start to reflect.
Absolutely. So we cut this to half an hour, so we're going a little quick today. And we're going to try and keep all this in so Brian and I can just kind of think of what goes on during our agencies and share with you.
Yeah.
This is the best surprise we have seen in the last week for our agency. And I think others are seeing it as well. I've talked to a few other agents. Some admitted carriers are coming back, at least for now, in places that we were not able to write admitted for the longest time. Specifically West Roseville, West Park area, Folsom, south of 50 with all that new construction by White Rock, Anatolia area of Rancho Cordova going down Sunrise, and
Mhm.
even so far as El Dorado Hills admitted carrier approvals for homes in those areas. So it's going to be dependent on the property, of course, but we're seeing stuff that we've not seen at all.
And I believe that they're packages too, right? It's not just standalone home.
Not just standalone, yeah. Admitted
Yeah.
carrier that writes both home and auto.
And I think that that's a reason why we brought up the auto too. But you know, a lot of these companies that are integrating back in, I don't know. I don't think it's package only. You know, they will allow standard online auto or homeowners,
Mm-hmm.
but they are preferred wanting, you know, that package business.
Sure, absolutely. And almost always it's going to be a win. So,
Yep. Yeah.
but yeah, that was the best surprise. And I know I'm not the only agent that's seeing it. I know there are other agents writing other carriers I don't have that are writing admitted. So, definitely a good sign for the consumer that at least, oh, thanks, Mike. Required packages for Mercury, Safeco, and Travelers. I know we were talking earlier today, and definitely they're requiring packages, but they are writing. Again, it's going to be property dependent.
Yeah.
But we're seeing things happen, and that's the most important part. Is carriers, admitted carriers, are starting to write. I don't foresee excess and surplus going away completely or in any great amount, but it's that slow reentry back into the market that's good for everybody.
And that's why you should always continue to keep checking different local agents, independents, because the independent agent channel is going to have more access than a direct carrier like an Allstate or a State Farm or something of that nature. Right?
Yep, absolutely.
Hate to name call. I know it's always, you know, on the consumer's mind is, oh, I'm going to go back to State Farm. You know, you hear package business or admitted companies coming back up, and they were always one of the largest insurance writers in the world or in the state. Sorry,
Both in the country and the state.
Yeah.
Yep.
So yeah, it's definitely always great to check in with your independent agent or a local friend and see what maybe is happening in the market.
All right, so that's 2, and then 3 is specifically, sorry, wrong.
I guess while you're on this slide, I guess go back, Chris, because you're seeing it too. Like, of those 4, I would say El Dorado Hills is probably one of the most foothill-ish like risk area. I mean,
sure, yeah,
it's probably just because of it being expanded. You know, like
we're talking, you know, like around Folsom Lake on the southeast side. El Dorado Hills. So yeah, that'd be foothills.
Yeah. That's awesome news for sure.
Yeah. Anatolia and Folsom south of 50, really that's, you know, it's all dirt down there. It's all just undeveloped land.
Undeveloped. Yeah, and I think that's the thing is that now that it's starting to kind of be more developed, and maybe there was a recent fire station or hydrant line that got put in.
Yeah, it's very possible. Fair plan servicing bottlenecks. So I know there's been some very up and coming news of changes happening, auto pay happening, all these things going on. I know I'm seeing it in my agency. We're definitely seeing quoting just fine, not a problem. Servicing, we've had to follow up with the fair plan numerous times. There's been some endorsement issues for us. It may be user error, but we're doing the same things we were doing before, and now they're not working. We have to email into underwriting, and response on that has taken a while. We have called in now numerous times and gotten somebody on the phone, and they're like, oh, this is an issue, and then they clear it, and then a couple of days later we get it resolved. And just it's not as fast as it used to be. I think that they're getting low. I like that one. I like that one a lot.
That one's good.
Yeah,
we could do that.
That works too. Yeah, but yeah, are you seeing the same, Ryan?
Yeah, I feel like the fair plan wave. It's like the fair plan. I guess just like think of it like the ocean. You know, there's the fair plan's the ocean, and it's just constantly pushing up against the shoreline. So this recent wave of all of the wildfire hardening endorsements, people being notified of being able to apply for those new endorsements now midterm. And then I think they're just all looking through the past and current inspection reports and then sending out all those notifications to insureds right now, which it's just crazy. There's so many people that are wanting to understand, what the wildfire discounts are, how to apply for them, and then what the next step is. And then Fair Plan is basically taking all those and sending out notices to insureds. I think it is better now though, because insureds are being notified of that correspondence, where before it was all being sent to the agent channel.
That's definitely an improvement
to send out.
I had a client fill out the discount form. We submitted the endorsement, provided the form, and a couple weeks later, we get an email with attachments back saying, "Hey, we've applied it all." Well, that the actual discounts got applied rather fast, but then we got correspondence that said, "Hey, we need you to prove these discounts are actually applicable. Send us photos, or else we're going to remove these discounts." And I called the client back and they're like, "Yeah, no, we can't meet that. We can't meet this." Even though we've had the conversation, I haven't followed through all of that yet to see how fast that endorsement comes off, or if is it going to wait to renewal. We haven't seen anything from them yet. Have you?
Well, I think the thing is, a lot of those notices had also mentioned about them removing replacement cost from the policy. And it's kind of weird timing that now Fannie Mae, Freddie Mac is actually removing or is allowing actual cash value policies as well. So,
do you know if that's on a case-by-case basis? Have you seen that in writing? I mean, I would love to get that, especially for lenders that are having pushbacks on, these older roofs. Comp shingle roof is 21 years old, etc.
Right.
We've got admitted carriers that absolutely won't cover that at replacement costs.
I'm sure a quick Google search.
Yeah, you could probably beat me to that, but that would be some really good stuff to know if Fannie and Freddie are not requiring.
Yeah,
RC.
that was like a day ago. So it just says Fannie Mae, Freddie Mac removes home insurance requirements that will reduce costs, apparently. I
see it on FHFA.gov. That's awesome. Great news. I did not know that. Thank you.
I mean, and there's a lot of carriers too that'll do actual cash value for roofs as well, but not for the structure. They'll give that at replacement cost. So
yeah, RCV or ACV or depreciated cost for the roof, but give full RC for the structure.
Yeah,
the Fair Plan doesn't do that. That's all or nothing.
All or nothing. Yep. But it's like, that was a huge thing, is I think a lot of companies, a lot of lenders weren't aware of how Fair Plan's tactic was on, especially this recent wave of endorsements. But a lot of them weren't aware, or, maybe they got it Fair Plan a couple years ago, and now it's actual cash value because of the outdated roof. So it's going to be interesting now to see if that's going to be the new norm, which is now underinsuring clients for settlement issues. Scary stuff.
Mike's commenting or asking a question, and you've already answered it, but let me put it back on the show here. He said R-A-R-E. He corrected it. Lenders allowing ACV or actual cash value settlement for homes. So you've already addressed it, but yeah, and then I will send Mike the link.
I mean, it's so new. I don't know if a house closing today. I guess I could contact.
No, but it's definitely a conversation to have with that lender if they're getting pushback.
Yeah,
because an underwriter could see that, and then they have to go to committee and get it approved. But at least there's something to explain what's going on, because like you and I know, and Mike knows, is there's not many options out there sometimes. That's all that they can get coverage for. Cool. Moving on to the next slide here. I'll leave this one to you, Ryan. You know much more about it than I do.
Yeah, just following all of the filings that's going on with Fair Plan and what's being introduced this past, I would say, month. There's just been a lot more work as far as what's being filed, what's being translated. For them to encompass the originally there was a rate increase scheduled for April 1st, and with the timeline of things that needed to get approved and then implemented, that's out the window. I mean, here we are, the 20th or 19th, and April 1st is just around the corner. So believe that they have to have at least a 75-day window of opportunity to get the rate approved and then implement it for a start date. And right now, July 1st was in a lot of their filings. So, right now we kind of are in that window that if a lot of the things get approved and get implemented, July 1st could be the next date for the rate increase. Which is just going to be crazy. I mean, it's that 20. I think we put together.
That was my question. I was going to let you finish, but we put out a tool on October 14th about the proposed rate increases, and we said, bold and underline, this is purely based on a recent filing and is not the final rate. We are going over the date. It looks to be, instead of April, July. Is there anything in those filings you've looked over that shows the rates to be different, or indications that the rates they're filed are going to get approved?
So I did see a new customer dislocation sheet, which basically says per zip code what the rate increase could be. So I haven't had yet a chance to go through our website or your website that you put that tool together and match it up. But we could definitely get that updated, because we do have a per zip code breakdown in that filing that shows what the average impact will be, dollar amount and percentage for your area.
So like for 95959, that's Grass Valley, right?
That's Nevada City.
Nevada City.
And
what was Grass Valley's?
Oh, Grass Valley. So 4595945 is just standard Grass Valley.
Give me 1 second. I'm pulling it up in our tool. So the average rate increase is 22.7. So we can compare it. If you get me that spreadsheet, I can absolutely do the comparison.
Okay.
But it'd be cool to see.
So proposed or average? Wasn't there?
I'm looking at proposed rate impact, 22.7.
So proposed says 23.9.
For 95945, to be clear.
Correct.
So higher than the initial, and just for that zip code. It could be all over the place.
Right.
But so it doesn't look like it's, I was thinking maybe, how you get these carriers filing for 15% and only get 8 or 9, right?
Yeah.
So
and one thing that I did see through all that filing, which we can go over again too once before, but I did see that it says distance to water source instead of water hydrant, which is huge for clients.
If you have a pond on your property with a pump and solar,
pond or pool or
is it going to matter? So like I have a client who I know has solar batteries connected to their pump that's in their pond. That means they'll consider it, or will it be just because there's water there but no power to get it to the home? Is that going to be a factor, or am I asking too much? Yeah,
I mean, you kind of asking a little too much, but I would say it just says water source, so I do want to make sure specifically how it's listed and how that interacts with the client. But if it is water source, I have seen other clients before where they're outside of the 1,000 feet of a hydrant, and it's thousands more. So if it gets changed to water source instead of water hydrant,
it could be significant savings.
That could be significant savings. So the rate increase would be huge.
And just so I could put this up on the screen for the recording, this is what you're talking about. It's a legitimate government website, immediately released yesterday, and then remove certain homeowners insurance requirements at a reduced cost. So I didn't read it, but it's oh, there we go. It's right there. Fannie and Freddie will not accept actual cash value coverage on roofs for single family homes and condos. That's awesome. Let me drop this back over here. I'm going to save that link for later. And we are at 5 minutes to go for questions.
I mean, Mike's the only one who's active. He's so active in the chat. He's just running around, running errands.
Listening to two other insurance agents talk about insurance.
This has been a good podcast for sure. If you watch this, had a question about anything that we went over, I know we can put links in our chat, right? So we can put links to.
Let me do that, actually.
We can put links to the Fannie Mae, Freddie Mac immediate release.
I'm going to drop the Fannie link right now.
Okay.
And then I'm going to go back to our tool. Give me 1 second here.
Yeah. So that way we'll update Cobalt Insurance's rate increase proposed. And again, it is proposed. It's nothing that's actually going to happen, but there's a potential of it happening very, very soon. So we want you to kind of be on the cusp of understanding that your rate and your renewal could have a significant increase, and you should definitely start preparing for it. And hopefully find a local agent and be able to go elsewhere.
And I'm going to add in also our YouTube link if anyone wants to look there, and your YouTube link, just to have it, because Facebook doesn't show this.
I think you have one watcher. If anyone has a chat or question, comment, put it in the chat, and we can address it. Right.
Wow.
Right here and now.
I just saw the Freddie and Fannie accepting ACV roofs on that Facebook post. So this is breaking news.
Yeah.
Awesome. Anything else you can think of this week that you want to talk about?
Yeah, I mean, if you're watching this, always, try and understand, like you can leave your fair plan at any time. A lot of people are waiting until the renewal date. And I don't know about these other new carriers as far as their allowances for packages or even just availability. But because of how fluid our market is, if you hear or see or feel like you can make a move to another carrier and get off fair plan, I would always try and do it as quick as possible.
Well, there's that dollars part of it, right? If you could save, $3,000, $4,000, $5,000, $7,000, even if it's for 1 year of saving, why wouldn't you do that?
Yeah.
I mean, you want to weigh the pros and cons of each different carrier, water damage or something or other, higher deductible, wildfire deductible. At the end of the day, if it fits your risk appetite and you're saving money, you're going to want to do that sooner rather than later.
Yeah.
And if you have to go back to the fair plan next year because that carrier increased, great. You've saved money in the interim.
Mm-hmm. Oh, you know what we should bring up is that list that we just heard about for lenders not paying the DIC or the difference.
Yeah, let me find that. Okay. Explain it. I'll pull it up.
Yeah, I'll explain it. So there's been some other lenders that we've been apprised of that are not going to pay the supplemental or the wrap or the difference in conditions policy. So it's that other companion policy that you have to your California Fair Plan. They may have paid it in the past. They're just now taking a stronger stance in not paying it any longer. So if at renewal it's coming up, you may be susceptible to having your supplemental policy cancel because your lender is now not going to pay it, and you are going to have to put that, budget ready for that, which is huge. I mean, I was talking with my other agent, and it's like, that's $1,000, $1,500.
And to be clear, you do not want to go without that coverage.
Yeah, some people are like, "Oh, I just will go without it." Well, that's your water damage coverage. That's your liability coverage. That's your theft coverage. There's a lot of perils that you're more susceptible to filing a claim with those instead of the fair plan right now. At the moment.
Absolutely.
So yeah,
water damage is still a very big factor.
Yeah.
Let me just drop this all in there.
So if you have a lender and we put this in our chat that aligns with one of these names, be aware that this year they may not pay your supplemental difference in conditions policy, and now you will have to come out of pocket, because right now it's traditional where we just auto bill the lender.
Mm-hmm.
And
Absolutely.
I don't know. I was kind of chatting with what approach I should take, and I feel like I still want to bill them because maybe it'll get by them and maybe they'll pay it this year. I don't know.
Part of what we do for our renewal process is we tell the client, hey, we're billing this, and let us know if it's changed. And a lot of our clients, so like as an example, I'm not trying to call out anyone, but let's say Freedom Mortgage, for an example. During the closing, so the lender you're using to purchase a home, during the closing, everything is paid out of escrow, regardless if it's the fair plan or the DIC, other than the down payment for the fair plan. They do that as a courtesy. And then the next year at the renewal, there's no communication whatsoever. We find out that the DIC policy hasn't been paid. We reach out to the client. They call their lender. Their lender says, we're not going to pay the DIC. It's in a very bad spot now for the client to either go without or all of a sudden incur the costs outside of escrow that they had not budgeted for. So it's definitely something that's a factor. It's not as expensive as a fair plan, but still you're looking at, $1,200, $1,500 to $2,200, something like that.
It doesn't look like United Wholesale Mortgage is on that list.
I'm sorry, I missed that. That's right. I'll add that right now.
So yeah, I mean, that's huge. Yeah, your fair plan is going to get paid, but you were accounting for your escrow to pay for that other policy, and now they're not going to do it. So before it was kind of split up because it was built up into your mortgage payment. So yeah, you could ask for an escrow analysis to have it rebalanced, but you have to pay for the extra $1,000. I mean, the extra $1,000 you should pay for to help have.
It's a budgeting thing, though, right? Mm-hmm. It's just more difficult.
Yep. All right, that was the last thing that I was just like, oh,
great idea, great thing to think of.
Yeah.
Cool. We are now over our 30 minutes. We'll end the stream, and we'll be back next week with hopefully more information.
Thanks, Chris.
Thank you.